Another year cannot come and go and you're still broke. You're still struggling financially. You can't pay your bills and so many other things. We are going to turn that around this year. I'm Kalilah Reynolds and it's time for another episode of Money Mondays JA. I'll give you 5 simple steps to turn your finances around. I said simple, but it won't be easy. You're going to have to be disciplined and consistent. Money Mondays JA is brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today and follow We Are Proven on social media. Now, before we get started, don't forget to like this video, subscribe to this channel, and of course, share with a friend. Also, subscribe to our newsletter at KalilahReynolds.com/newsletter. You can get a transcript of this episode and you can get everything directly to your inbox. Later on, I'll be telling you about the Investing for Beginners Masterclass as well. So, are you ready to transform your finances this year? Let me tell you how to do it. So, step 1, you are going to make your budget. And we talk about budgeting all the time. It's a very simple exercise. You need to figure out what your expenses are, and also on the income side, what are your income sources? And think beyond just salary. What are ways that you can increase your income as well? And it's very important that we do this exercise because we need to budget for our financial freedom. So you may have either 1 or 2, probably both of them, major financial goals this year. And a goal for a lot of people is to pay off debt. Another major goal for people is to start investing. And these are 2 things that are going to help you build your wealth. So you're going to do your budget. And once you've figured out what your major expenses are, what your all your income sources are, and potential income sources as well, you are going to budget a line item for your financial freedom. And in the first instance, that budgeted item, whether it's $5,000 a month Jamaican, $10,000, or even less, whatever it is that you have determined you can afford due to your budget, the maximum number. So you want to be at this stage, especially if you're trying to pay off debt, making sure that you allocate the maximum number towards that financial column. So you've done your budget, and now you are going to allocate money towards either paying off debt or investing. So, and a lot of people tend to ask, well, what should you do first? Should you pay off debt or should you start investing first? Well, that really depends on the type of debt you have and the interest rate attached to that debt. So if you have very high interest debt, especially credit cards, those are very high interest. Microloans, very high interest rate debt. You definitely want to pay those off before you start investing. And the reason for that is that the interest that is going to accumulate on those debts is going to really hinder you from investing the way you want to invest. If you're spending $5,000, $10,000, $15,000, $20,000 a month paying off the interest alone, that is money that you could be using to invest and actually build wealth. But that money is there accumulating in interest and holding you back. So if you have credit, especially these 2, credit card debt and microloans, you need to pay those off even before you put anything towards investing. And the reason for that is that the interest rates on these types of debt are very likely much higher than you are going to earn by investing. So if you put that money towards investing rather than towards reducing your debt, you are going to suffer a loss, because chances are, and I'm not saying that it's not possible, but chances are you are going to earn less by investing than you would lose from that high interest debt. Because like I said, that those interest rates on the credit cards are about 50%. If you invested on the junior market last year, you would have earned about 30%, which is great, but 50% is higher, you see. So you definitely want to pay off those high interest debt first. Now, when it comes to things like mortgages and car loans, those interest rates tend to be in Jamaica less than 10%. Right now, if you have a recent mortgage, you're probably paying 6, 7, maybe 8%. Car loan, you might be paying 8 or 9%. And you can generally be able to beat that by investing on the stock market. Like I said, last year in 2021 on the junior market of the Jamaica Stock Exchange, you gained an average return of 30%. So because the interest rate is higher, sorry, not the interest rate, but the return is higher than the interest rate on your loan, then it makes more sense to put more money into investing than it does to those types of low interest rate debts. And I say low loosely because it's low for the Jamaican environment, although in other countries, 7, 8, 9% interest isn't low. In our context, it is. On the S&P 500 as well, in the United States, 2021 was a pretty decent year. The average return there was about 30%. So there are opportunities to earn significant returns by investing on the stock market. And like I said, depending on what type of debt you have and the interest rates that you have, you may want to pay off some of your debts first before you go all in to investing, because that debt is going to be just a noose around your neck. All right, so the next step, you've decided, you've made your budget, you've allocated your funds, and now you are going to, if you have high interest debt, you're going to put that money in a special account to pay off that debt every month. So every month, that money goes directly towards your debt reduction. And if necessary, if it's a significant amount of debt and you really are feeling burdened, you may want to consider doing debt consolidation. So debt consolidation simply is putting all your loans into one, and several banks, several financial institutions do this. They might offer you a debt consolidation loan where they're going to package off your credit card debt, your hire purchase debt, your maybe even your car loan and your mortgage if necessary. And they're going to put that all together in one. And generally what happens is you're able to get a lower interest rate, and you're able also to get a lower monthly payment than what you would be making trying to pay off all these different types of debt to different lenders at one point. And so that can help you to manage the burden of getting rid of your debt. So you're going to do a debt consolidation strategy if necessary. This isn't absolutely necessary for everyone. If you're able to map out a plan to deal with your debt on your own terms, and it's not strangling you as much as it has it to me in the past, then you can manage it, then you might not need to take this step. But if you do need to take this step, it's definitely something that you want to look into. So you're going to put that money in a special account that goes directly towards paying off your debt. And this step is only necessary, of course, if you have debt. Some people are fortunate to not have any debt and can simply move on to the next step, which is your investment account. So the next step is to open up your investment account. If you want to start investing, it is absolutely necessary that you have an investment account. So you choose a broker. There are 13 licensed brokers in Jamaica, and my broker guide can help you decide which one is right for you. It comes free as part of the masterclass package. You can also get it free when you subscribe to my newsletter at KalilahReynolds.com/newsletter. So you're going to open up an investment account. And if you have been paying off debt and now you've gotten to the point in the year where, okay, great, all your debt is paid off, you're going to reallocate the same funds that you had been using to pay off your debt. And rather than, oh, now all of a sudden I'm rich because I don't have this debt anymore, you're going to put that same money into your investment account every single month. And like I said, if you didn't have any debt, then you can just skip that whole debt step, that debt process, debt reduction process, and go straight here. So you're going to set up a salary deduction or a standing order. If you are employed, if you rather than self-employed, if you go to work every day for a particular employer, you can ask them to set up a salary deduction for you. So a salary deduction is simply money that your employer takes out of your salary every month, and it goes straight to a particular source. So you can ask them, usually it's a bank or some institution that you owe money to, but you can ask them to send a specific amount of money to a specific account. And in this case, it would be an investment account. So your salary deduction would go straight there. If you're self-employed and you're unable to do a salary deduction for that reason, you can set up a standing order through your online banking. So all this is that it makes it automatic. So that when you go, you log into your online banking, you look for standing order, and simply, like, you may have already set up automatic bill payments. Some people do that through their online banking. It's the same process, that you're going to set up a standing order that every 25th of the month, as soon as you get paid, or whenever your clients pay you, whatever your payment cycle is like, that money, specific amount of money, is going to go directly into your investment account, because the key here is consistency. So I've mentioned that you can start investing with very little money, 500 Jamaican dollars, 1,000 Jamaican dollars. But the key to really growing that wealth is to doing it consistently. So you want to build upon that wealth. You want to be purchasing stocks every month, ideally, maybe even every week, whenever you get money. So maybe your standing order isn't necessarily monthly or weekly, but you may say, okay, whenever I get paid by any client at all, if you're self-employed, I am going to put 10% of that payment directly into my investment account. Or I'm going to put, if you're still dealing with the debt, 10% of that payment directly into my debt reduction account. So you're going to make that automatic. So that is how you are eventually going to get rid of your debt and really start building wealth. And these are steps that you do them consistently and with discipline, you are going to see a huge difference in your financial situation within this year. Now, if you want to learn the keys about investing, the key strategies, the basics about how to invest, of course, you need to take my Investing for Beginners Masterclass at KalilahReynolds.com/masterclass. I have tools there to track your portfolio. You can get my free stocks tracker. Like I mentioned, you get the broker guide, you get the ebook, you get the 6-part video course, and so many other key resources for you to start on this important journey. I'm Kalilah Reynolds. Make sure you like this video, subscribe to this channel, and if somebody else needs to hear this message, then share it with them. Share this video with a friend. Subscribe to my newsletter at KalilahReynolds.com/newsletter. We'll talk again soon. Let's get this money. Money Mondays JA was brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today and follow We Are Proven on social media.
Let's get this money.